Welcome back to Alpha Recap, your end-of-day market download from stockalpha.ai. We wrapped after the close today, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai. And to kick things off, a quick look at the tape. The S&P 500 ETF closed down about 0.2%. The Nasdaq 100 ETF dipped about 0.3%, and the Russell 2000 Small Cap ETF actually climbed about 0.6%. So a mixed day, and a theme of rotation rather than a broad sell-off.
Thanks. Great to be here. Yeah, that snapshot summed it up. Modest pullbacks in the big cap indices and a noticeable bid in small caps. The story tied together a handful of sector headlines, some company-level news, and, importantly, a big calendar item, a Fed chair hearing later in the week that kept investors cautious.
That divergence between big growth names and smaller, niche sectors, it felt pretty clear today. Walk me through why the S&P and the Nasdaq were softer, while small caps were stronger.
When you step back and look at this, it was more rotation than panic. Large caps, especially growth leaders, had run ahead recently. Analysts note that after a run, traders often take profits or trim concentrated exposure ahead of macro events. So we saw money shift into smaller names where there are clearer idiosyncratic catalysts. Things like takeover chatter, deal flow, or sector-specific news. That's why the Russell 2000 Small Cap ETF outperformed today.
Right. So not a broad risk-off day, but a reweighting. Which sectors really stood out as beneficiaries?
Cannabis had renewed momentum. Headlines on regulatory progress and M&A chatter lifted a cluster of names. Communications and media saw dispersion because ratings changes and content schedules matter for earnings expectations. Renewable-linked utilities got attention after analysts revised project timelines and funding assumptions. Materials and specialty miners ticked up with talk of energy transition metals. And real estate, especially some REITs and specialty property operators, picked up steam thanks to deal announcements. Oh, and energy names tied to the EV supply chain were active too, with investors parsing EV adoption timelines and policy support. It was a bit of everything.
So cannabis, some niche industrials, renewables and utilities, and deal-driven real estate. That checks out. How did tech behave against that backdrop?
Tech was slightly softer. Again, more of a consolidation than a collapse. Some big names paused after recent rallies, and others reacted to company news. Traders described it as a breathing room move for mega-cap growth. Not a great day for chips or a few super-weighted growth names, but not a wholesale unwind either.
Got it. A few company stories also made headlines today. Marvell, Tesla, IBM, and PepsiCo were mentioned in the note. How much did those individual names influence the tape?
Company-specific items mattered a lot for intraday dispersion. Social media chatter around Marvell's job postings and capacity plans stirred speculation about chip demand, which helped parts of the semiconductor supply chain. Tesla continued to be in focus as investors parsed unit trends and margin commentary. That always moves EV and supplier names. IBM drew analyst activity around first-quarter dynamics, and PepsiCo showed up for distribution and product expansion headlines tied to sports drinks. Then you had a batch of small-cap filings and 8Ks that created isolated moves. Those ripple through the small-cap universe faster than the mega-caps.
And crypto-linked names? The note mentioned sensitivity there, too.
Yes, crypto-related equities were sensitive. Bitcoin itself was relatively steady, but derivative and infrastructure tokens remained volatile. Analysts pointed out that continued DeFi stress kept trading in some names choppy, so even stability in the underlying cryptocurrency didn't fully calm equity volatility in that subset.
Let's switch to the bigger picture, breadth and technicals. What did the internals tell us?
Breadth was mixed. The Nasdaq Heavy Index lagged a touch versus the S&P, signaling some cool-off among large-cap growth leaders. Meanwhile, small-cap outperformance suggested healthier breadth at the smaller end of the market. Momentum indicators implied short-term consolidation in mega-cap leadership, but not a definitive trend reversal. Fundamentally, pockets like consumer staples and parts of the banking complex showed resilience, while margin pressure worries and geopolitics kept some investors cautious.
Okay. Fed is the big event on the horizon. What did markets seem to be pricing ahead of the Fed chair hearing this week?
Markets priced a cautious stance. The key dynamics are straightforward. If inflation remains sticky or labor metrics stay strong, rate hike risk perceptions could rise and likely put pressure on higher valuation growth names. Conversely, any hint of patience or dovish nuance from the Fed would probably favor long-duration assets and revive leadership in technology. Analysts emphasize that right now, sector fundamentals, regulatory moves in cannabis, or project timelines in renewables were moving prices more than big macro surprises did. But the Fed event could change that quickly.
So the Fed could reverse the rotation if comments shift expectations. What should listeners be watching tomorrow?
Keep an eye on 4 things: the Fed chair hearing and any subtle language on rate trajectory, companies reporting earnings or updating guidance, especially in tech and consumer cyclicals, whether flows into cannabis, small caps, and select REITs continue, and incoming macro reads like regional PMI or consumer confidence. For traders, implied volatility around earnings will create tactical opportunities, but also higher risk. For longer-term participants, the question is whether breadth improvement among small caps is durable or remains concentrated in a few pockets.
Right. And the other thing is, if small cap strength broadened beyond a handful of sectors, that would be meaningful, correct?
Exactly. Historically, mid-cycle rotations where domestic, cyclical, or undervalued pockets outperform have preceded more sustained reallocation, but only if the advance broadened. If strength stayed limited to cannabis and a few REITs, it could be short-lived. Analysts look for expanding participation across sectors as a sign the move has legs. Yeah, that tracks.
Honestly, I was a bit surprised by the cannabis bounce today.
It surprised a few people, but it also fit a pattern where liquidity chased relative value after recent underperformance. Deal chatter and regulatory news tend to spark outsized moves in that group.
Okay, before we close, let's give listeners 3 clear takeaways from today.
1. It was a rotation day. The big cap benchmarks finished slightly lower, while small caps showed a meaningful bid. 2. Sector-level catalysts drove stock selection more than a unified market move. Cannabis, renewables and utilities, and deal-driven REITs were notable. 3. The Fed chair hearing later this week is the main macro event to watch. Any shift in tone could quickly change which parts of the market lead.
Quick reminder, everything we discussed was for informational purposes only. Analyst note and data suggest trends, but this is not personalized investment advice. We didn't recommend any trades today, just context on what moved markets.
Exactly. Objective market color and analysis, not recommendations. If you want to dig deeper on any of the sectors or names we mentioned, we'd love to hear from you.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next close with more context and perspective.